Good morning, traders. Welcome to another Flow Show. We write Wednesday, 11th of February, 2026. Yes, Bran, Ryan is just off for the morning. He will be with us for the face show a bit later on. Before we dive into whatever's been going on over the past 24 hours and looking ahead to what is to come, just a reminder that you can still join us, put in your email, and you will be kept aware of everything that will be coming. The trading analytics morph is getting closer every day. Um, right, what's been going on? If I would go over all the headlines, I think the show would last into until phase, but let's keep things a little bit short, shall we? There's been a lot going on the geopolitical front again. Trump was extremely active yesterday, Greer as well, Besson as well, as usual. Um, First of all, the pressure from the White House seemed to have gotten the best of Ukraine President Zelensky, and he said that he would announce on the 24th of February he would announce plans to hold presidential elections and a referendum on any peace deal with Russia within the next 3 months. That is coming on the back of pressure where U.S. officials or the White House was saying that if things drag on beyond the 15th of May, they would take away the security guarantees that they have, the agreement that they have with Ukraine. So, under pressure, Zelensky, who up to now has always said that those votes would not be possible, seeing the country is under martial law and the population is displaced with Russia. Um, having about occupying about 20% of Ukraine's territory. But under the White House pressure, now we are getting closer to presidential elections in Ukraine. There's been other headlines as well. Seems like U.S. Negotiators are still working hard behind not behind the scenes because it's in the open, but still working hard to try and get a peace plan on the on Ukraine Russia. Let's see how that develops then. Also, Iran now. There's rumors flying around that the US may send a second aircraft carrier. Trump said yesterday that, in his words, either we reach a deal or we'll have to do something very, very tough. Um, Iran has, in the meantime, said that they are not seeking a nuclear weapon and that they are ready for verification of their words anytime. But it does seem that that was a bit trying to win time because the Supreme Leader, an advisor to the Supreme Leader, now said that Tehran missile capabilities is a red line and that the negotiators have no authority to discuss missiles with anyone, including the US. So we're still at a bit of a standstill there. They also, the US was toying with the idea to seize Iranian tankers now, in order to put more pressure on Tehran. So that is still ongoing there as well. Um, Sticking to a last little bit on geopolitics. Well, it's not directly geopolitics, but Trump also directed the Pentagon to buy coal in a bid to revive the industry based on a 1950 Defense Production Act to power military operations. So they're still under um, the rules of defense and national security, are trying to beef up the coal now, um, the coal industry. Sorry, I was trying to read something else. Um, On the trade side of things, we heard that from the U.S. Treasury Representative Greer that the USMCA talks are ongoing, but that Canada is a difficult situation. And we heard exactly the same thing from Bessent over the past couple of days. We had then a response from Carney saying that he was calling them, as we should probably now as well, the bridge talks. We know that there's talks about trying to close the bridge between Detroit and Canada, but Carney was saying that things will all be sorted out. And then Trump went on to the Fed side again. First of all, as usual, he said we should be 2% lower in the rates right now, and Walsh will be a real influencer. Let's hope, well, unless you want to buy stocks now, maybe he's going to handle the Fed's affairs via TikTok. Um, he also said that he thinks that Walsh agrees with what he's saying, that is to obviously lower rates. The stock market should go up on good news. We had a good run. We want to keep it going. So that is really still the aim of the game. We had a few other Fed speakers yesterday as well. We heard from Fed Logan and Fed Hammack. Both saying roughly the same, that they want to keep rates as they are right now. They are diverging a little bit in on the fiscal side of things. Sorry, on the inflation side of things, where Hammack said that inflation was still too high. Logan said that inflation is slowly getting there. But both said that they find that the labor market is stable, and for as long as it remains stable, subject to, of course, evolving, and then especially for the worst. That they want to keep the rates steady. And talking about that jobs market then, we also heard from Navarro yesterday saying that the expectations for job numbers must be reduced. That comes on the back of Lutnick saying about the same thing. And then, of course, the press and the market thinking that they are hinting at a worse jobs report today, but they quickly, both of them, we're just pointing at what is going on now, the low hiring, low hiring, low firing. Also pointing out that less migration would dampen the supply of jobs right now, but not really telling us that the job report today should be bad. Lutnick Daw, he stuck a bit of a knife in the dollar, and is by saying that the weaker dollar is now at more natural levels. Foreigners have been manipulating the dollar higher for years. I think he forgets that for those foreigners investing in the US have also been paying for part of the debt interest, right, and buying all those US assets. But anyway. It could be a bit of a dangerous one. And then just quickly looking towards what's coming up on the jobs report, because if the reports weaken and start to show up all those proposed cuts and expected cuts in different companies, they could actually get what they are looking for, a weaker dollar, but maybe even worse than what they are actually looking for if the market completely turns its back to US assets. We are by no means there. We have been talking about that already very often on the show, that any rebalancing right now, taking away China, that has been reducing a lot over the past years, but the rest of the rebalancing has been relatively smooth right now. Even if you look at the TIX data, there has been a little bit of an increase. And by the way, China has not been completely reducing US assets, because some of the US assets they reduced based in the US, they have been transferred apparently to my home country, where Belgium has now seen a market increase in dollar holdings. And some analysts and some specialists and some, how shall I say, spies, have been noting that some of that money may actually be Chinese, but that's for the little story. Um, so yes, that's on the front. What else do I have? Yes, we need to talk obviously about what's going on in Japan. As we've seen, and we will have a look at the yen levels, of course. Um, Takaichi has got at least temporary a serious vote of confidence, where the market was probably also positioned short yen, and those positions have been reduced. We did see some serious strengthening in the yen over the past two sessions. We have been talking about it on yesterday's flow show and on the face show as well. There is a clear vote of confidence in what Takaichi may try to do over there. What is helping as well is the fact that they are looking at ways to fund um, tax cuts by other means than just issuing more bonds, which would put downward pressure on JGBs, upward pressure on the yields. And um, one of those possibilities, where yesterday I was talking about the foreign exchange fund, right? Where there was already $5 trillion in profits, which could be somewhere used. And now something else came up in the Japanese press today, which actually was the opposition that was looking at this, and that's the Bank of Japan ETF holdings. We know that Bank of Japan has started to roll off their ETF holdings, but at a very, very slow pace. We've got to know that at the pace that they are running off their ETF holdings right now, it would take them nearly a century to get rid of all of them. So this is really the slow pace that they are running at now. But one of the suggestions was to use a part of those ETFs to actually pay for the tax cuts, right? And so they are still running at about, it's a bit less now, I think, but let's give and take $600 billion equivalent of Japanese ETFs, which would, of course, cover and more the tax cut funding needs. But we also have to know that those ETFs are bringing in money via the dividends, and cutting some of those ETF holdings is, of course, also going to cut those dividend income, which somewhere pays for the government deficits as well. So there is a bit of a bit of a for and against using some of it, but I think that is going to be, again, needing a very, very careful consideration what they are doing with it. But it is all within the card. So the fact that they are looking at other means than just selling JGBs is also helping to calm down the JGB market that was really worried about all those stimulus packages, and in seeing actually JGBs going up a little bit over the past two sessions, and is calming markets, and less fear is underpinning the yen as well. By the way, if you're looking at the Japanese markets today, they were actually closed. So if you want to look at what the Nikkei is doing, it's actually trading around 58,000 on the futures, but the official Nikkei was closed today. So we will have to wait for tomorrow to see what the Nikkei is doing out in Japan, but we know that it has already ramped up quite significantly since the landslide victory of the LDP. And oh, the other thing, and just one word on that. There's talks about Takaichi wanting to change the constitution, and especially the peace clause that they have signed back in 1947, where it stipulated that they said no army. Okay, so they have some sort of self-defense force, but now they want to change the constitution to be able to beef up their air, sea forces, just in order to be able to defend themselves. It's not to go to war, but it's more on the defense side of things. But if they don't change the constitution, they will also always be hampered by um, this clause saying that they cannot have a war-ready military. Okay, just know that it should be a very, very lengthy process. It's quite complicated. It could take between a year and a half, 2 years to get it through, and obviously it's going to cause another stir in on the geopolitical scene, especially then by China, obviously, but don't underestimate Russia either, because they always have an interest on the northern side of Japan as well. So don't underestimate what could happen on the geopolitical side as well. But it's also again proving that Takaichi really wants to make changes and wants to push the LDP program. Abe actually never succeeded to bring this changing constitution to a vote, but she has the firm intentions to do so. Um, Right. What else? What else? What else? What else? What else? Oh yeah, on the EU side, this time EU side there is they are getting a bit closer to approving the US trade deal. We know that they have been putting that on hold because of the threat of tariffs, etc. Again, but they are getting closer to approving it. But they are going to build in a sunset clause. They are giving 6 months to the US to lower the 50% steel product tariffs to 15, and also they want the whole trade deal to have an expiry date in 2028. So they could vote it, but then we will have to see again what the reaction will be of the US administration. Okay. Right. I think I'm roughly through what has happened overnight. So I think we can have a look at the data that came out and also what we are expecting for the day to come, which is of obviously the next biggest ever data point in the history of financial markets. Yesterday, we had a bit of retail sales out of the US. They came in flat, was perhaps expected to be showing a bit of a positive, but they have been a bit underwhelming in December. That also gave the dollar a little knock on the head, albeit still, sorry, still reasonable if you take away the yen. Of course, the yen is always to be taken differently than all the rest, right? Yen is a different play for now. Also, the wage, where is it? The employment cost index also ticked lower by just by a tenth, but it is ticking a bit lower. That also got some analysts talking about again the lower hiring, the not really wanting to pay up, etc., etc. So that gave analysts another bit of food for thought to say that the job situation in the US is in fact deteriorating. After that, we had the 3-year note auction, which went relatively okay. I spoke already about Logan. We had Dow. Where is it? Where is Mr. Hauser? We had the Aussie, the RBA Hauser out, and that was around the time where, or after, we saw those home loans numbers tick up and housing finance also remaining pretty high, although the revision here has been nearly halved. But he was talking overnight as well, and he said that inflation is still too high, that the RBA cannot let it persist. So that is the same line as Governor Bullock. He also added that the strengthening credit growth is still a sign the monetary policy is not restrictive. The only thing where he cautioned against is that growth is bumping against the capacity constraints. So growth is held back by the capacity of really growing, and also productivity constraints. But they are still in their fight um, against inflation, which in turn has sent the Aussie then through the resistance level we were talking about yesterday. We had a bit of a slower CPI inflation data in out of China, but it does seem that base effects have had the better of that inflation number, and some analysts are already saying that the February number could rebound. We will see how that happens. Just know that it had absolutely zero effect on what happened in the Chinese yuan, which is still continuing to gradually appreciate. We also had the PBOC again fixing a tad lower, somewhere in the 694s are they right now? Let me just quickly verify. Yeah, they fixed at 694.38 versus the prior fixing at 694.58. So they are still in their gradual scenario of lowering those fixing rates, which gives the market the green light to continue to weigh on the dollar versus Chinese yuan. Very minor data out before we get to the main main piece of what we are expecting on the menu today, to the main course. We do have a bit of industrial production out of Mexico. The other day we had ah, half sticky inflation coming out still of Mexico, but that was already what the Banxico was hinting at last week. So it just keeps the Mexican peso relatively well underpinned. I'm going to have a look at the dollar mex, by the way, because we are slowly approaching the big support level. And then obviously the main piece are going to be the NFPs today, the US job report. I would say obviously, we take everything. First of all, is the package. Non-farm payrolls expected around 66K. Know that the whisper number on Bloomberg has been revised lower after the comments that we had from Hassett, from Lutnick, from Navarro. That number is now below 50K. That's the whisper number, which is what analysts and propeller heads try to figure out what the number is going to be. Take it with a bag of salt all the time. We don't know exactly what the number is going to be. And then look at the unemployment rate. Obviously, if that would be still around there, that would be slight positive, I would say. If it ticks up again above 4.5 or so, it of course is going to impact a little bit the dollar as well. Uh, private numbers. I think this is the number that we really should be keeping an eye on, because that could finally show what those challenges layoffs are showing, what the jolts are showing, and etc. etc. So this number is really going to be a driver as well. Okay. Average hourly earnings have been ticking down, are expected to tick down a little bit more, but that would just be a bit of a kicker perhaps. And then we have obviously we have the famous revisions. Now, I've seen all kinds of rumors that the revisions would be virtually nil, that the revisions would be horrible. Just take the number at face value. I'm always saying, like, people expect stuff, and then we need to. There's always a lot of comments about, but yes, but, and yes, but, and maybe the revisions next time, maybe the weather this, maybe the geopolitical is that. A number is a number, and somewhere, if you look at how money managers run their books right now, that's the number that goes into their models, right? Whether it is seasonally, whether there are base effects, whether um, whatever reason, it is still the number that goes into their models and their model will then tell them what they have to do on bonds, on equity markets, on currencies, you name it. But that is still the number. So that revision should be coming out today as well. It's always been a very big point of discussion, but we will have to see exactly what this number comes out. Government payrolls, yeah, yes and no. We know that they have been reducing staff, so I wouldn't be surprised if this comes out even flat or so. And that's about it for the numbers. So yeah, we're always waiting for to know when exactly is the job market really going to roll over. We have seen weaknesses. We have seen comments from the Fed officials, Powell included, that they saw that the job market was stabilizing at a very low hiring firing level, but stabilizing. So they think not worsening, but the market is thinking differently. If you look at what we are doing on the rates, the market is definitely thinking differently, and that there is a risk. Okay, so that brings me to the rates and what's happening and what we can expect. Do you see my euro dollar screen there, guys? Just waiting. Yeah, okay, thanks, Brian. So, okay, what's happening? We are trading right now, actually, we are trading the high on the day on the euro dollar. Euro dollar has been relatively stable for the since Monday, a bit of up and down, but the positive still is that we're held above or around this first little level already, 118.90. Obviously, it's going to be a big report. And if we get through this on a bad report, if you get through this 60-70, we're probably going to go back up to 120.40 because the market has already traded in the direction of the expectations. The options market, the rates market is trying to figure out whether they want to price in 2 or 3 rate cuts. We are actually slowly slipping towards a third rate cut for this year. That's all based on the fact that obviously we know all the other reasons, geopolitics and what the Trump administration wants to do and what the officials are telling us, but the market has also started to trade a weaker jobs market. But I would argue that there's still room to roam. Okay, so if we would get a very weak report, we are definitely going to see a test of this 119.60-70, potentially go back into the 120s because the market will have that bone of a weaker jobs market, which is big. We know it's the second mandate of the Fed, but it's big, and you will see calls for rate cuts popping up left, right, and center, and it may actually drag them over the line in a certain way because jobs are very, very, very important. Okay. So that's in case we get a better report. Now, we have to admit that so far, most of the job market we've been waiting for a year for this job market to roll over. But we also saw that it hasn't really rolled over yet. So if we will get another report that defies the laws of gravity, it's probably going to trade back below 118.90 relatively swiftly, because the market will have to readjust their positions. But still, then it will depend on the details, that employment rate, the revisions or to the jobs, etc. And again, I would say keep a very close eye on what's happening in the private payrolls. Okay, so if they would show maybe 50K, the market may say, okay, and the NFP showing the expected 65K, better than expected, coming down there. But then we will need to see how the market wants to play it, because if it's better but not outstanding, there may still be a case of some people trying to buy the dips, okay? And then we need to watch 2 levels here. But this one is the 117.5 is going to be on a really, really good report, then that the market really has to rethink what it's trying to price in into expected rate moves. But I would say in between, we already have a few interesting levels, because that's been a top before, 118.65.70 and then 118.20.30. I think 118.20.30 is interesting enough because of the moves that we saw here, the hesitation before doing the next leg higher. I think the 118.2030 is really where uh, decisions should be made on the day to the downside. Okay, so we have looked at the both scenarios. I'm personally still also waiting for when the reports will really roll over. So I'm like, as people already know, mildly but reduced short dollars. But it's I'm leaving myself the opportunity to look at both sides because the report should be big enough. And as we have been discussing about it with Ryan as well, it's very interesting that it comes out on Wednesday because we don't only have the Friday afternoon to panic and ahead of the weekend and then having to put the pencils down. No, it's coming out on a Wednesday. There will be two full trading days coming on the back of it to digest and potentially trade the trend of the report. Okay, so I think it's quite important it comes out on a Wednesday actually. So have a quick look at the cable, which is also pushing through now, and of course we know that sorry, we know that Starmer survived to live another day. He actually had a bit of support from even people who were against him before, Streeting, and then he also had a bit of support from Miliband. So the support he got was enough to keep him in the seat. And as usual, the market likes to trade a bit short sterling, as I've already been saying. So there was a catch up to do for the cable because we saw the move higher and then back down. We are trading around somewhere around 87, the figure, which is higher than prior, but I would say in the light of the past few days moves relatively more to the neutral side. It's actually looking a little bit fragile, so the cable has retraced and caught up rather with the rest of the dollar pairs. And we're trading right below the 137.2530, which I think is going to be the interesting zone going into the report because we saw a low here, we saw a high here. Give and take pips, okay? It's an important enough report. 40 could be printed and then going back down as well. You see what I mean? We need to allow for algo pips when reports like these come out. But if it breaks above 137.30, we are probably going for a test of at least 138. Why not going back up there? Because as we've already said, sterling market was reluctant on the back of Starmer, etc. So there may be just a bit of elasticity in this, enough elasticity in the cable to push through. Now, what happens on a better than expected report? I think then we need to look at a couple of levels here. I think the first one is going to be somewhere around 136.40, 45, and then this zone here. It's going down to 135.90. It starts around 136.15, 20. You see here, you see the stop here. That is going to be the decision zone where the euro dollar is somewhere around 118, 20, 30 ahead of the real bigger one around 117 and a half. I think the cable is potentially here around 135.90, 136.20. Okay, if we get a move like this and start to hold here, that could be telling. All right. um Okay, all right, Ali, you're out of your sterling. Alrighty. Yen, and what's happening in the yen is potentially important. Okay. And why is it important? Let me try and give you a roughly clean look. And I'm going and on the crosses, on some of the crosses, it's even more important. But this was what we had end of January, the rate checks, okay? So this is a bit of a special event. But before that, we only had like one close, and that is September, okay? Since July 2025, we only had one close, and it's been really hoovered up immediately afterwards. um, below the daily cloud on the dollar yen, which is something that the Japanese really watch. Yes, okay. So we had that scare. Then the market ramped up again. We even went above the cloud, but then we had like two little warnings. And yesterday we were warning about that. We took the positions. We entered the cloud in a more natural way, retested the top end of the cloud, and yesterday we dropped through it. Okay, and that's potentially very important for Japan and for the yen because the Japanese investors, the Japanese traders, they look at what's happening at this cloud. So keep one level in mind going forward. That's 154.70 or 70.80. Okay, that is going to be quite important level going forward for the dollar yen on the top side. If it starts to go back above, that may mean that all the moves that we see now is just people getting out of short yen positions, and that's it. And now we wait for what's to come next on Takaichi's side. But it could, as we already discussed as well, and there's a real potential that it could be the vote of confidence for what Takaichi is doing. And in that case, this thing is probably any retest on a better than expected um, jobs report today, any retest up there and a cap could be really telling. Okay, so that's for the dollar side of things. Obviously, if we get a crap report, needless to say, we are going to be very quickly to that. This is actually a trend line. Which has only been breached on those rate checks, but any retest afterwards has held 152.5. But then obviously, the level that everybody is looking at is 152. If the 152 goes, then we are going to have a very quick look at what's happening towards 150, 150.5, which is obviously going to be a very big psychological level as well. So there is stuff at play here in the yen. Really, I think the next 2, 3 sessions could be really defining. Okay, if the market continues to give Takaichi's vote of confidence, look at what's happening in the JGB environment. Look at what's happening in the Nikkei environment as well, because we have seen a marked reversal of the correlation that we have seen between the Nikkei and the yen since Monday. So keep an eye on all those things because we could potentially be in the process of changing the side in the end. Okay, again, maybe a little bit too early. That's why I always speak with two words and always a bit conditional, but the potential is there. And why is the potential there as well? Is that look at this. This is even better, a better representation than the dollar yen. We have not closed below the cloud in the yen, and this was actually even going up already, the euro yen, but we didn't close below the cloud from since March 2025. This is nearly a year, okay? And yesterday, so this is again the intervention scare or the rate check scare. But before that, we never really entered the cloud since August. Yesterday we entered, oh well, today, sorry, today we entered the cloud. We also moved down. People look at 50, 55. It doesn't really make a difference. It's a few pips. But we opened and dropped inside the cloud. So this and on my updates, those who will have read my updates know that this is kind of the representative because it's, let's say, after the euro, after the dollar yen, it's probably the second pair, and then the third pair will probably be Aussie. And if you look at it from the Japanese side of things, but it's one of the representatives of the non-dollar pairs, I call it. So this is potentially giving us another indication as well. So watch what happens close of day, but I would say give it a few sessions though, unless we ramp higher again. But give it a couple of sessions, but keep an eye on what's happening around this 153, 153 and a quarter, because the cloud is gonna hang around there virtually until next Monday. Okay, so it's going to be a good test to see what's happening as the week goes on. If ever we drop below the cloud, which is not too far away from 180, and also I think what is this here? Is that the 100? That's the 100 DMA, which is around the bottom end of the cloud. Obviously, if you drop below there, then something really has changed for the yen. But take that one into account as a supplementary indication for what's happening for the yen's health. Let's call it that way, for the yen's health. Okay, so I think this is important enough to keep an eye on as well. Now, what's happening in the rest and what can we expect? Aussie. Aussie is pushing through. Also, if you look at Aussie Kiwi, it's also pushing through. So it's still doing a lot better than its cousin, the Kiwi. Um, that's RBA's Hauser, who dragged Aussie through that 9095 resistance, which is obviously going to be the important level for the close today. We have a little bit of a trend line here, but I think I'm going to take that out soon. If we get back below 9095, then we need to watch out. Yeah, okay, around 70, but I especially think 70 and a half, 70 and a half, 70 and a half, 70 and a half, 70 and a half. And when we went through, we had the acceleration. Okay. So I think 70 and a half is the magic number on the day in case we get a much better than expected US jobs report for those trading Aussie. If we get a weaker one, I want to say not a disaster one because we also know that Aussie tends to trade with risk. So a disaster one is probably going to put a lot of pressure on US equities, which in turn could be a bit of a break for this one. But get a bad one, just a simple bad one. It's probably going to push up to 70 and a half and 71 and a half. And then I think we have to look at the longer term here, and that's around 72, 15, 20. And if we really get a weak jobs report, I think this is where we're heading on the Aussie, because there is a lot still going for it, as I've been saying. The RBA is bullish, the hawkish. The numbers that we saw are pretty good. Sticky inflation as well, but also a very decent jobs report. And as we saw, those housing data, the credit data are still pretty strong. So there's still a lot going for the Aussies. So this is still one of my preferred ones for a push higher if we get a mildly bad US report, which will give the market that bone to continue to chew on to sell the dollar. Okay. RBNZ is still a week, more than a week away, right, Ali? And they have, I think something. I think something in the data was not great for the Kiwi. So I'm still thinking that RBNZ may not turn completely hawkish. They're not expected to hike rates, in contrary to the RBA, who did hike rates. Um, I'm not expecting them to go all hawkish, but we will talk about that next week. But we can see that Aussie, although it is also now pushing a little bit higher, but these are much smaller moves than still on the Aussie. We need to get through 1690 the figure to continue to push on the Kiwi, and that's only to bring it back to the June high, July high, 2025. Okay, so it's still very much a laggard versus the Aussie, meaning that potentially, if we get a good report out of the States, we could retest and potentially get below that 60, 35, 40 to have a look again at 60 the figure. So if we get a good report, maybe this one may be a little bit more vulnerable again than the Aussie. Let's see. Just a couple more because I'm looking at the clock and I really should be closing, but it's important because we are on an important level. Spoke about this 640, 943.45 on the dollar Norway. We are there. So this is another one. If you get a bad report, which is bad for the dollar, this could actually break today. Okay. To reverse this, we need to get back above a really shorter term. Yeah, then I need to go now. on the shorter term, at least there are levels around 57.60 on the dollar Norway, but we are really there, on the 43, 45. If this really would break over the course of the day, I think move down to 910, where we find levels of interest again, and that's back in 2022 in the dollar Norway, but that would mean another 3% decline. Okay, it's a daily, so don't underestimate those moves. That in case we get a break. Okay, in case we get a break. Dollar mix is also coming closer to the bottom end of the box. 17, I call it 17 the figure. The trend line comes in at around 1709, but I think we need to give a little bit of more room to this, to the end of the lower end of the box. But if we get breaks today, this could mean to go on a bit lower again. And why is the mix doing so good? If you look at the discussions that we have, USMCA, the US is a lot less worried about their southern side, the Mexican side on the USMCA, because the Mexican officials, they want to stay on the right side of the US administration as the Canadian side of things. Even though dollar Canada has dropped and the Canadian dollar is doing, I think, a little bit better than what a lot of people are expecting. But there's more reasons to like the Mexican peso, I think, still right now, besides still being a very high yield currency right now. So keep an eye on this afternoon. We're trading around 1714, 1713 right now. So keep an eye on what's happening anywhere between 17, the figure, and 1710. A break could see another acceleration. And to finally finish, metals are pushing again. Silver in particular is getting very close. We've broken above the Monday's high. It's getting very close to that 86, I think, which is a bit of a pivot level in this big, what I think consolidation range. 86 the figure. If it breaks this afternoon, it might go above before the data already, seeing the speed of it ticking up again. But I would say, especially after the data, look what's happening here. 86 above or below could be pretty determining for the next move in silver. Gold is hanging towards the top end of the consolidation period around that high here. 5100, that's the magic number. 5000 on the way down, maybe 515. But 5100 here is the magic number where we get after the US data. And with that, ladies and gentlemen, I hope I've prepared you for what's to come this afternoon. Thank you very much for joining me today. Safe trading, happy trading, and we talk to each other on the Face Show. See you.